Hello and welcome to the paid weekly recap for the week ending June 6th, 2025. I'm Keith Harwood here for Yellow Tunnel. Also pictured is Vlad Karpel, CEO and founder of Yellow Tunnel and the creator of the artificial intelligence system used in the predictive AI for dynamic market system. Before we get started on the weekly recap, let's go through the disclosures. Options involve substantial risk and are not suitable for all investors. Yellow Tunnel and myself are not investment advisors and not registered with the SEC nor FINRA. The information in this presentation is for education and information purposes only and should not be considered trade advice. And also myself and or the team at Yellow Tunnel may have a financial interest in the securities presented and the trade ideas. If you need more time with the disclosures, please go ahead and pause the video now. Otherwise, we will get into the weekly recap of what's going on in these markets. So broadly speaking, we've been range bound in the 10-year yield. And this is the first thing that I tend to look at because when we see big shifts in the bond market, that tends to shift down to the equity markets. The big move was really on Friday. So on Friday, we had an increase in the yield as non-farm payrolls came in a bit better than expected. So early in the week, we saw positive job openings. Then we had some little troubles on Thursday, and we'll go straight to the market for the visual of this. Thursday was a bit concerning. We had some back and forth between Elon Musk and President Trump about budget issues, personal issues, etc. Not very professional to say the least. I don't know that many would disagree about that, but at the end of the day, I'm not sure how much it really matters from a broad economic standpoint. The jibber jabber, the social media battle that was occurring. If the economy is doing well, if we make some progress on US-China trade negotiations, that's what's really going to matter. And we had good economic data on Friday. And we had at least the semblance of something resuming between US and China in terms of tariffs. So what does this all mean? It means that for the S&P 500, we closed above the highs of SPY since February. So all in all, this is showing bullish signal. We had some good chop, a little bit of a pullback, follow through, and then finished near the highs. Now, if I add in the overnight session and look at the broad index, we will see that we are slightly below the highs from when we said that tariffs, when the court ruled that tariffs would be removed and were put in unlawfully. But nevertheless, for the main trading session, the market open session, the 8:30 till 4 o'clock, till 3 o'clock Eastern or Central time. 9:30 to 4 o'clock Eastern time, NYSE market hours. We have the market breaking out to the upside and showing more upside overall. This is what the bull has been waiting for. It seems to be setting up a better bull tone for the market. We're seeing it as much as anything in tech. Very heavily growth focused. We are slightly below the Thursday highs in tech. We did get above the Thursday highs in the broad market. But tech continues to show some leadership capabilities here. Semiconductors look generally good. A lot of investment flow into artificial intelligence. And what's been lagging has actually been the Magnificent Seven. Those started to show some participation on Friday. So, broadly speaking, we're seeing a lot of diverse buying, especially within tech, growth heavy focus. This shows to me some confidence in this bull market, people looking for growth opportunity as opposed to safe haven bull. This is a growth focused bull. And that is generally a good sign for potential for equity returns in the future. Nothing guaranteed, of course, but it does show a bullish tint to the market. Small caps have been lagging, but on Friday, they also broke out above this recent range. Still generally lagging. I mean, we're towing around the March 24th, 25th, 26th high level. To get back in line with the broad market, we'd be looking at prices around 220, maybe a little bit higher. So we've got about 3, 4, 5% to catch up here just to get back to where we were seeing at the beginning of the year. But, even small caps starting to participate now. And that's, I think, just generally speaking, a good sign for the market that there's a little bit of broad participation. And the VIX, of course, a new low for this move. So since the April 7th, April 8th, April 9th, crazy volatile markets with the VIX pressing 60, but really ranging between about 35 and 60. We're now in half that, just under 17. If we get into a normal bull market, a traditional bull market, new highs above 613 in SPY, I expect to see the VIX down closer to 12, 13%. but the downside to VIX is fairly limited, especially relative to the levels that we were seeing around 30, 40%, or even 25%. There's a lot of movement downward in the VIX when it's sitting at 25%, such that the extrinsic value, the value in excess of how far in the money an option is very highly priced, expecting large range movements. We're starting to now price in an expectation of a slower moving summer market drifting higher. And that actually sets up really well for finding rotation and leadership within the paid system. Now, last week we didn't have any trade signals because we were still in that question mark. And honestly, having no signals through non-farm payrolls, I think was a very beneficial thing in terms of the expected value of any trade. Now that we've gotten through that and we're slightly higher than we were at the end of last week, the bull signals are starting to show up much better. And the VIX being lower means that the options leverage is cheaper. So I can get paid, pun intended, on a smaller upside move in the equities that we start to identify via the AI system. And we've moved past some of the fundamentals. Of course, US-China trade negotiations and tariffs in general, still a big economic focus, but we've gotten past non-farm payrolls. We've gotten past some of the jobs data. We're getting some more clarity on the economic impact of tariffs, how that impacted individual equities on their earnings. For example, stocks like Lululemon this week had a big downward move. And I think there's a lot of questions about how each individual company is impacted by tariffs, but broadly, the expectation seems to be that the economy on the whole is looking relatively strong right now. Now, again, anything that comes out, sort of surprise announcement, whether it's US-China trade negotiations or something that we're not even necessarily monitoring as closely, could shift that quickly. But for now, the bull market looks to be going more and more in place. Now, again, we didn't have any paid signals this week. We are expecting new paid signal or signals this upcoming week. So please keep an eye out on your inbox for that this week on Tuesday morning. Additionally, make sure you're watching that live trading room. Continuing to find good opportunity in spite of this chop market, continuing to show appreciation in the live trading room ideas that we discuss every morning bell, every closing bell. Vlad and myself talking through market conditions, seeing what the AI is saying, and seeing how to structure trades that may end up being a bit more complicated, but often have a great expected return, whether it's an earnings-based play or a butterfly or a credit spread. We do have a lot of different unique opportunities that are going on in this market, and we're going more and more towards the lower VIX long outright option setup. But there are still opportunities out there in things like put credit spreads, earnings trades, whether they're calendars or butterflies, and the lot. So there's a lot of good stuff out there. Make sure you're logging into that. You can always ask us questions about what the AI is seeing in a name that you're looking at, or how professional options or technical or AI-based trader looks at these stocks that you are evaluating, in addition to a number of ideas that pop up based upon intraday movement and or setups that are showing but may not be particularly strong indication from the AI. We may have a like anti-bearish type thesis from the AI, and that can still be leveraged for good returns. All right. If you do have any questions, you can always email me, keith@yellowtunnel.com, or email vlad@yellowtunnel.com. Happy to address any questions you may have, talk through markets, talk through option setups, talk through technical setups, talk through AI setups, etc. So if you have any questions, never hesitate to reach out. And thanks again for being a valued member of the paid system. Have a great trading week ahead, folks. Thanks again.